Hello friends, today we're going to be discussing and answering the question, can you do a land contract with an existing mortgage? So can you do a land contract with an existing mortgage in place? Well, by the end of this video, you'll understand the ins and outs of utilizing a land contract when there is an existing mortgage in place, whether you're the buyer or the seller, and how to navigate potential legal and financial pitfalls. Have you ever wondered if you could even sell a property with an existing mortgage via a land contract? Is that even legal? Well, stay tuned as I break down this process and uncover for you the risks and the rewards. I'm first going to explain what a land contract is. Secondly, I'm going to detail the components within a land contract. And finally, explain to you how a land contract can be used if there is an existing mortgage in place. If you're ready, let's go. So what is a land contract and how does it differ from a traditional purchase and sales agreement or a mortgage agreement? A land contract is a seller financing agreement with terms that have been negotiated between the buyer and the seller directly. Because of that, many of the provisions within a land contract can vary depending on both the buyer and the seller's situation. And one of the nice things about it, they're not subject to any of the conforming rules or regulations or criteria that traditional mortgages are. In contrast, mortgages are very strict and they are structured in very standard ways where you typically know what the mortgage rate is for a 30-year fixed or a 15-year fixed. Whereas with a land contract, the seller can set the interest rate which they want the buyer to pay every single month. In addition, with a land contract, the seller is going to retain legal title to the property until the final payment is made by the buyer and all the conditions have been met. So what are the components within a land contract that both a buyer and a seller should be made aware of? So for the buyer, one of the important elements of a land contract is the fact that the buyer is going to be utilizing a land contract or looking for somebody that will offer a land contract because they're not in a situation to take advantage of traditional financing, meaning they don't have the credit history, or they have bad credit, or unfortunate situations have happened in the past that do not allow them to get a traditional loan through a bank. Or they could be in a scenario where they don't have enough money saved up for a down payment because let's be honest, in today's market economy, with housing prices as high as they are and interest rates as high as they are, a down payment is going to be considerable. Whereas with a land contract, you could potentially get into a home with no down payment. And obviously some of the components within that is the purchase price that's negotiated, the interest rate that's negotiated, the cadence of those payments every single month, down payment if there is any, the term of the loan, and at what year mark is it going to be amortized out to? Also, is there going to be a balloon payment at a certain time? Those are all components that are negotiated between the buyer and the seller in a land contract. Now from the seller's side, let's look at some of the benefits or why they would want to utilize a land contract. Well, number one, the seller can charge more than the bank because it is untraditional. It's not a traditional mortgage. And the seller is taking a risk. Understand, if the seller is utilizing a land contract and the person doesn't have the credit history or the funds for a down payment, there's a much greater risk sitting with the seller than with the buyer. And so traditionally, a seller in a land contract is going to charge a higher interest rate and potentially make more money because they are becoming the bank. One other massive advantage for a land contract that really benefits the seller, and overall, land contracts traditionally benefit the seller more than anything else, and this is probably the biggest reason why. With a land contract, the seller, if the buyer defaults, can evict that buyer and not have to pay them any of the payments they've made up to that point. So the seller has the rights like a landlord where they can evict somebody, but none of the responsibilities. The buyer is responsible for the taxes, the insurance, the utilities, and the maintenance on the property. Whereas with a traditional mortgage, if payments were missed or not made, the bank has to go through a foreclosure process, which takes a ton of time, it costs a lot of money, and can be extremely strenuous for both parties. And one other benefit for the seller is it takes a whole lot less time than a mortgage can take. Sometimes those mortgages, getting all the financial documentation that a buyer needs to the bank and eventually have them close and fund the seller could take 60 to 90 days, whereas a land contract could be done in days. So is it possible to do a land contract with an existing mortgage? The short answer is yes. But typically it's done with some variation of land contract called a wraparound mortgage land contract. So how does this all work? Well, number one, if you have an existing mortgage and you're the seller and you sell that property, you do not have to pay off your mortgage, right? But with a wraparound land contract, the payments that come to you from the buyer, You utilize that to make your mortgage payment and keep the difference. Now, this isn't typically traditional, but something that absolutely can be done. So if you're a buyer going in this situation, you need to go in with your eyes wide open. So here's some things to consider if you are the buyer and there's an existing mortgage on this property that you're purchasing. Number one, the buyer is going to receive the warranty deed to the property immediately, which means they own the home from the start of the contract. However, as I mentioned before, that deed is not completely finalized until that very last payment is made under the land contract, or if there's a balloon payment that's required at some point down the road. Now, here's something else to keep in mind. You have to consider the seller's lender. Because there's an existing mortgage in place, that means there's another lender. So that lender needs to be notified, and they must usually agree to the land contract. And that lender, that first lender, will typically retain that lien position on the property. This means that if the buyer doesn't make payments, the lender will be repaid first if the seller forecloses. So this is something to be aware of, and this can be a potential major risk if you are the buyer. Let's say that the seller all of a sudden stops making payments to the bank, and the bank forecloses on that property or starts to go through the foreclosure process. You as the buyer could potentially lose all of those payments that you've paid, even though you've been current with your payments. So that is why getting a land contract with an existing mortgage, is it possible? Yes. Is it dangerous? Yes. So I would make sure that when that land contract is negotiated between the buyer and the seller, and you understand that there's an existing mortgage, I would get a good real estate attorney who is knowledgeable in land contracts. They can absolutely help you in case something like that were to happen. So as a buyer, you really need to consider the challenges and circumstances that surround a land contract if there's an existing mortgage in place. There's definitely some danger, but absolutely can be a great tool, especially in a market economy like we have now, where there isn't a ton of homes being bought and sold, and individuals that want to own a home but maybe can't at a certain time, but as they build up credit history or work experience, that they'll be able to close or refinance that home at a certain point down the road. So land contracts can absolutely be a good thing. You just need to go into it with your eyes wide open. In conclusion, a land contract really benefits the seller, because the seller's taking the risk to finance this property as somebody who maybe can't qualify through a traditional bank mortgage loan. However, as a buyer, if there's an existing mortgage, you've got to understand that if the seller defaults, you could be in a very negative situation. Now, these are things that I've seen when it comes to an existing mortgage on a home and a land contract is done, but I'd be interested in your feedback. So please comment below. Let's engage in a dialogue. And as always, just for stopping by, I've got a free gift for you. It is a short-term mortgage calculator. You input the price of the home, the income, the expenses. This software will actually spit out to you whether it's a good deal or not. It's 100% free, no obligation. Just click on the link below, aaronsfreetraining.com. Thanks for stopping by. Have an amazing day.